morning, traders from whichever side of the country you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst, HFM East Africa. Now, a quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading in the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets the right way. Now, in the spirit of 15 years, celebrating providing new traders with the right platform, with the right products, we have a few promotions. And currently, we are in round 2 of Battle of the Elite. We just did conclude round 1, whereby tomorrow we are going to have a live giveaway on our Instagram channel, whereby we shall announce the winners on the Battle of the Elite round 1, whereby one of you traders is going to, number 1 essentially is going to walk home with 650,000 Kenyan shillings. Number 2 is going to walk home with 260,000 Kenyan shillings. Then number 3 will walk home with $1,000, equivalent to 130,000 Kenyan shillings. All of these will be streamed live on our socials on Instagram. Now, moving over to today, whereby once again we are in round number 2. When you go over, log into your HF website under the promotion section, this tab is going to open up. Yesterday, the Battle of the Elite currently at the moment, once again, round number 2 is ongoing, whereby if you do click on it, it's going to open a new tab whereby you have an opportunity to become Kenya's Don or Bees, claim the crown. Once again, we are going to offer you 650,000 Kenyan shillings for number 1. How do you join? You go over to your HF under the promotions, open a Battle of the Elite trading account, deposit at least 100 United States dollars, and trade any asset and rank in the top 3 traders by percentage wise. Now we are going to have 10 winners in the lucky draw, taking home each $200, equivalent to 26,000 Kenyan shillings. Not only that, we also have the first 5, round number 2, once again, whereby you have an opportunity to win a total of 325,000 Kenyan shillings, which is in the prize pool. The promotion is going to end in the next 12 days and counting, where it's not only a marathon, it is a sprint, whereby the first one to trade will be the first one to win. Once again, how do you join? You go over to your HF under the promotion section, join the first 5, trade 150 lot size in Forex, gold or silver, and stand a chance to be one of the first 5 traders to complete the trading requirement by 22nd of October this month. I have just started a segment on our Instagram whereby I would want you to engage with me. Which are some of the assets that you would want me to look into? I want to give out a shout out to Tasha Beck for being the first one to join. Welcome, Christina. Welcome, Stilnboy. Welcome all. Now, when we usually start our morning market calls, we generate ideas and we go over to the economic calendar. This is whereby when you wake up in the morning, what are some of the assets? What are some of the volatility that you do anticipate as a result of news releases in the markets? Now, when you go over to the HF website under the tools and education section, you want to look at the economic calendar. When you pop up the economic calendar, it's going to bring up this tab whereby it's going to show you what are some of the news releases. And starting off in the day whereby we did have, let me refresh this page. Today is 9th, whereby earlier on in the morning, we did have Japanese yen foreign bond investments coming in, whereby the previous number was negative 158.7 billion. The number was actually revised from 162, meaning it was downscaled even further. Now, the data has come in slightly positive compared to the previous number, and this is what we're going to see. Now, when you're looking at the Japanese yen, currently at the moment, they're going through economic uncertainty, especially with politics. We have just seen a new prime minister being elected, and we'll want to look at how the markets are going to react to this information, especially looking at the Nikkei 225, which we shall look in just a few moments time. We did have inflation expectations for the Australian dollar coming in for the month of October, whereby the previous number was 4.7, and actually the data came in better than anticipated at 4.8. Now, when we look at the Reserve Bank of Australia, they are looking into cutting interest rates in the near future. Now, this information that has just been released today is going to have a very big impact on price action in the Australian region. Now, how does this data come and play into Powell. Now, the consumer inflation expectation is released by the Melbourne Institute, which presents the consumer expectation of future inflation during the next 12 months. The higher the expectations, the stronger the effect they will have on the probability of a rate hike by the Reserve Bank of Australia. Therefore, a high reading should be taken as positive or bullish for the Australian dollar, while a low reading is usually seen as negative or bearish for the Australian dollar. When the data is usually released, you do have this tab that is going to pop up, whereby you have an opportunity to read the official report that was released at exactly that moment in time in relation to that news article, whereby we would want to look at what does this number have in store for us. Now, as you can look at this article, it's .au, meaning this is a government article that was released at exactly 3 a.m. today, Nairobi time, whereby this the economic and social shifts are changing how Australians are approaching key life decisions. Very interesting. Now, we want to look at the most recent development, which is today, the report for 2025. And we'll want to look at households and family lives. Now, when this data comes out better than anticipated and inflation is anticipated to pick up in the Australian region, it means that there is going to be more Australian dollars in circulation. This is very important because the more a currency is circulating, the stronger technically it's going to be. Now, it's the mandate of a central bank to find balance between high inflation and low inflation. When you look at it from this scale, when you look at Australia, they do have a lot of reserves, they do have a lot of resources in terms of minerals. Now, if the currency is going to be expensive, it means that whenever they're exporting, it's going to affect into their profits. Now, one of the mandates of a central bank, once again, is to find a balance between producers and consumers, okay? Whereby if they feel like inflation is too high, a central bank would want to raise interest rates to discourage spending and encourage investing. Now, this usually attracts capital into an economy. On the other hand, if they feel like inflation is moving to the low side aggressively, they would want to lower rates and encourage borrowing. Basically, they're advocating for you, the consumer, go take out loans from the banks. Loans are going to be much cheaper for you. Now, looking at the inflation expectations for the next 12 months, we do anticipate inflation to pick up to 4.8%, which could have an impact on RBA monetary policy in the near future. Now, today is a very, very important day because we are going to have Fed Chair Jerome Powell's speech in the next 5 hours, 2 minutes, as per the time of recording, which is going to be exactly 30 minutes after New York Open. And we want to listen to Fed Chair Jerome Powell. What does he have to say about future economic outlook? Now, this is why we traders usually focus on the speeches, because they do offer forward guidance. The biggest forex participants essentially are the central banks. If we have the chairs of the central banks offering forward guidance, where do you think the economy is generally headed to? Especially this will be interesting looking at where the United States are currently at the moment with the government shutdown heading into the 9th day. And we would want to listen to his tone. What does he have to say? Statistic has it that the United States government is going to lose at least $9 to $15 billion a week as a result of the government shutdown that we are currently seeing in the markets. Now, when he is due to speak, we would want to look at this article. So this is the Fed Watch tool, whereby the probabilities, we would want to look at the probabilities of interest rate cuts in the near future. Now, we have 2 meetings of the Fed Reserve this year. The first one, the second last one is going to be in the next 20 days and 10 hours counting currently at the moment, which is going to be on 29th of October, towards the end of this month, whereby there's a 92.5% chance that we might see interest rates being taken further down once again for the second time this year. The current target is between 400 and 425 basis points. We do anticipate at least a 25 basis points cut. Yesterday, the Reserve Bank of New Zealand did shook the markets, whereby we anticipated a 25 basis points cut, but they surprised the markets with a 50 basis points cut. Now, this is very interesting looking at what other economies are currently doing at the moment. When you look at the United States of America, this is one of the final countries in the world of the developed economies that still has interest rates above 4%. Now, if they do lower interest rates in the next 20 days and counting, it does mean that, yes, they are weakening the currency. Essentially, they are advocating for people to go take out loans, go borrow loans. Loans are going to be much cheaper for you. But on the other hand, it's going to weaken the specific currency. Now, looking at the final meeting, which is going to be on 10th of December, there's a 77.8% chance that we might see interest rates being taken even further down to 350 to 375 basis points. Currently, at the moment, there's a 21% chance that we'll see interest rates at 375 to 400 basis points. Now, going back to the economic calendar, this is going to be at exactly 30 minutes after New York does open, and I want you to engage with me. Tell me which are some of the assets that you would want me to look into as we switch gears to now. These are recent developments that are happening currently at the moment, whereby Trump has announced an Israel-Hamas ceasefire deal. Now, this was the first phase. There was a 20-point plan that he did enact, and we would want to look at recent developments currently at the moment. The US States President Donald Trump has announced that Israel and Hamas have agreed on the first phase of a peace framework that aims at a Gaza ceasefire and the release of Israeli captives and Palestinian prisoners. Now, the announcement follows from Trump's 20-point plan to end the war in Gaza, which he announced last week, which Israel, Hamas, and most of the world broadly did welcome. More than 67,000 people have been killed in Israel and on Gaza. The war on Gaza, described by many international rights organizations and the UN Commission as genocidal in nature. Now, what did happen late yesterday? Trump said Israel and Hamas have agreed to the first step of his Gaza ceasefire plan in a post whereby he did mention all captives will be released very soon and that Israel will pull its troops back to an agreed line as part of the deal. Just hours earlier, Trump had told reporters he was ready to travel to the Middle East as soon as this weekend to help push the plan forward. He had unveiled his 20-point proposal on September of 29, following a White House meeting with Israeli Prime Minister Benjamin Netanyahu, framing it as a roadmap to end the war in Gaza. Now, this could be very, very important to us as traders, because when you look at what has been happening in the Middle East, it has been affecting the oil markets aggressively. And if there's going to be a ceasefire, this means that the oil market is going to be much more relaxed. The tensions are going to cool down, which potentially could mean prices of oil could start stabilizing as we are heading into winter season, which is a very, very important season for people who are in extreme hemispheres. The supply and demand of oil usually picks up towards winter, whereby most of the houses are going to use more oil to heat up their homes. And we want to look at a chart of US oil in just a few minutes here. Okay, so let me pull up my chart, starting off with the New Zealand dollar against the United States dollar. If you have any asset that you want me to look into, kindly put it in the chat box, whereby we did see Reserve Bank of New Zealand yesterday lowering interest rates by 50 basis points. Quite interesting. Looking at price action ever since the markets did open, we did rally to the upper side slightly, tapped into a region of resistance around this region, and prices aggressively started selling off. This massive candlestick that we are seeing here was when the RBNZ did decide to cut interest rates by 50 basis points yesterday. The markets did retrace, but currently we are seeing sellers coming back into the market, potentially driving prices further to the downside. I would want to see how prices is going to react when we break this region of support that was formed yesterday after the RBNZ once again did lower interest rates, which is a good tradable range when you look at it on the markets, whereby this is less than 30 pips away from where price action is currently at the moment. Once again, if you do get candlesticks that close below this region, I would want to look at selling opportunities on New Zealand dollar against the United States dollar. Looking at the precious metal gold did retrace back into the 50 period moving average today, earlier on today during Asian session, and we had signs of buyers coming into the markets, whereby we had this hanging hammer, whereby prices did aggressively move to the downside, but buyers came in back, drove prices well above that region, and we had signs of buyers coming into the market. Now, looking at today's opening price, which is around this region, we did see this candlestick tap into that region, close well below. We had signs of sellers coming into the markets, and we'll want to look at oncoming data. What does Mr. Jerome Powell have in store for us later on in the day during New York session? Is he going to bring about aggressive interest cuts? Is he going to hold on the cuts currently at the moment? And we will want to look at the forward guidance that he will provide us. If it does mention that there is a high likelihood that we might see aggressive interest rate cuts, if you do get candlesticks that closes above this region. Now, currently at the moment, gold is trading above $4,000 an ounce, very all-time highs. We have never been in this territory on gold. Looking at how price action currently at the moment is forming, we did have this candlestick open, move to the downside. Currently, we are rejecting those lows, meaning there's a high probability that buyers are struggling out to push prices further to the upper side. If we do break today's opening price, I would want to look at more net long opportunities on the precious metal, anticipating that yes, interest rate cuts are inevitable in the near future, and we might see them in the next meeting, which means that if they are going to lower interest rates, the United States dollar is going to be weaker, and investors would want to park their money into safe havens. At this moment, we are looking at the precious metal gold, currently anticipating for it to move further to the upper side. The same could be said on the silver metal, whereby currently at the moment it's trading around $49 an ounce. Yesterday, we did tap into another all-time high, whereby silver metal did tap into $49.5 an ounce. Quite interesting looking at it, how prices did close well above the opening price. Currently at the moment, we did have prices open slightly move to the downside, the same price action that we have seen on gold, but at the moment we are seeing buyers coming into the market, whereby I would want to see if we do break the ceiling that was formed yesterday around $49.5 an ounce. I would want to look at the silver metal also continuing rallying to the upper side. On the other hand, we do have this region of support that is currently forming on the 50-period moving average. Currently at the moment, prices are trading well above the moving average, signifying that the trend still is to the upper side, and I would want to look at more net long opportunities on the silver metal. Now, looking at Euro USD, recent developments, we did see France's Prime Minister resigned just 24 hours after forming a new cabinet, and this was quite interesting. Looking at it, we have had President Lagarde releasing speeches for the past 3 days, whereby she had a speech on Monday, Tuesday, and yesterday also, and she was asked a lot of tricky questions about what is happening in France. Now, looking at France currently at the moment, they do account for more than 20% of the Euro GDP. Whatever happens to France, 20% of the Euro is more likely to be affected. Now, looking at it at the moment, investors are very uncertain about this currency at the moment, and we did see ever since the market opened on Monday, we did gap to the downside. Prices went below the moving average, came back, retest on the moving average, but currently at the moment we are very bearish on euro against US dollar, whereby currently at the moment, once again looking at it on this price action, we did see signs of buyers into the markets during Asian session, but it reached London Open, Frankfurt Open, whereby we did start seeing small candlesticks with larger wicks, signifying that okay, whatever was happening to the upper side is now losing momentum. And during London session, we did see sellers coming into the market, driving prices well below. Currently at the moment, we are trading below the opening price of the daily candle, and I would want to look at how prices is going to react on this region of support around 1.15931 region, whereby if you do break and close well below this region, I would want to look at selling opportunities on euro against the USD, anticipating that up until there is going to be certainty in the euro region, whereby France are going to appoint a new cabinet that both parties are going to agree upon, then I would want to look at more net long opportunities. But currently at the moment, as it stands, the uncertainties in the euro region is currently worrying, and we have been seeing institutions offload a fair bit of euro bonds currently at the moment, driving prices of the euro against the USD further to the downside. Switching gears to the United States of America, starting off with the S&P 500. whereby we did break out of this consolidation region that we have been seeing in the prices. Yesterday, after the markets did open during New York session, we had signs of buyers coming into the market. And looking at the closing prices, prices did close well above the opening price, and it also did close above this region of resistance that was holding the entire of the week. Currently, at the moment, we are seeing prices in between this region. And if I can take a trend line, if I can pick a trend line, identify this region, I would want to look at how prices is going to react. If at all we do break above this region, I want to see the S&P 500 moving further to the upper side, whereby if Fed Chair Jerome Powell does mention of interest rate cuts, it means that these companies are going to pay their debts at a cheaper price, meaning they're going to borrow loans at a much cheaper price, which could have an impact, a very big impact in their profits, meaning they're going to have more profits on their end. Now, currently at the moment as it stands, the previous meeting that Jerome Powell did have, he did mention that stocks are highly valued, and we'll want to look at his comments on what he thinks about the markets currently where they are at the moment. If you can look at historical data, the moment he did mention about stocks being overvalued, it was around this region here, which it was exactly 23rd of last month, whereby just after his speech, we did see the S&P 500 lose almost 1.8% of its total value, but quickly started recovering, forming new higher highs, higher lows, going to all-time highs currently at the moment. Now the ceiling has been broken. We want to ask ourselves where could be the next target, and I would want to look at more net long opportunities on S&P 500 if at all the speech from Jerome Powell is going to be very positive in terms of interest rates being taken further down. Now looking at US 100, which is a tech-heavy index, which constitutes of the top 100 tech companies in the United States of America, we did have prices bouncing off this trend line yesterday, whereby ever since Asian session, we had a bit of consolidation, but during New York session, we had prices move quite significantly, breaking this was Tuesday's high that was formed. At the moment, we are having a small bit of retracement, but during New York session, and I would want to look at Fed Chair Jerome Powell's speech once again and look at the equities. What are the equities going to have? Now, when you look at the government shutdown that's currently ongoing, most of these companies that constitute the NASDAQ, that constitute the S&P 500, the Dow Jones Industrial Average, these companies are private entities, meaning they are not going to be heavily affected by what is happening in the United States in terms of the federal government shutting down. But looking at it, we cannot overlook the fact that over 750,000 people are going to be affected as a result of what is happening currently at the moment. And what does Fed Chair Jerome Powell have to say about that? It's been a fight, an interesting fight between the Democrats and the Republicans, and we want to see if there's going to be a breakthrough in the near future. Now, looking at currently at the moment, shout out to Queen Bed Sheets, shout out to Enoch Mbaragas. Beautiful. Welcome. Thank you, brother. Thank you, brother. Now, looking at the Dow Jones Industrial Average, which is the US 30, currently at the moment consolidating for quite some time. Ever since Friday last week, we have been seeing prices consolidate for the past 100 hours or so, and we're going to look at recent developments, and the markets are waiting for the next piece of vital data that you're going to receive, which is going to be once again Fed Chair Jerome Powell's speech. What does he have to say about the future economic outlook, whereby currently at the moment we have this descending triangle, and we'll want to look at if prices do break above these highs. I'll want to look at more net long opportunities, potentially taking out the all-time highs that we do have residing around 47,000 on the index. Now, going back to GBP USD. Now, the British pound against the dollar currently at the moment, whereby we are forming clear lower lows, lower highs in the markets. Prices are trading well below the 50-period moving average, signifying that, yes, the trend is to the downside, and we have been seeing signs of sellers drive the markets further to the downside. I would want to look at a short-term retracement, potentially pulling a Fibonacci from this high to this low. And if prices do come back to the golden retracement region, which will be around the region that you're seeing around here, I would want to look at more net short opportunities on the British pound against the United States dollar. We shall be in Addis Ababa. For those who are in Ethiopia, we shall be in Addis Ababa from the 15th October till the 7th of November. We would want to call on all prospective traders, partners, and anyone who wants to learn about the forex market. Once again, we shall be in Addis Ababa from 15th of October till 7th of November. Now, this is the point whereby I would want to go to the comment section. What do you have in store for me? Okay, so 21 Forester, what is the effect of gold if have a peace deal? Okay, I do believe you're talking about Middle East. Now, when you look at gold, the Middle East usually is going to affect oil more. Okay, it's going to affect the black gold more. But when you're talking about the precious metal currently at the moment is a safe haven. With everything that's happening, we have been seeing, if I can go and look at it on a higher time frame. Let's go to a daily time frame. And I want to start analyzing this market ever since the year did begin, which was around this region. Now, when Trump did take over office, when he was officially sworn into power, there were talks of tariffs in the markets, and the markets reacted to these data negatively. And I want you to look at this price action ever since January till late April, early May. Gold did rally quite significant, and if I can just put it into perspective, ever since January till these highs, prices of gold moved almost 32% to the upper side in less than 77 trading days. But what happened afterwards was a period of consolidation whereby prices wasn't going anywhere on gold. Now, I want to switch my chart over to S&P 500 at a similar time. So for the next 85 days, prices of gold basically did nothing. But looking at the S&P 500, when there were talks of tariffs ever since January, somewhere around this region, we did see the S&P 500 lose almost 20% of its total value as a result of the uncertainties in the markets. But now, looking at this price action, this was the point whereby gold was really rallying. Now, when you're looking at gold usually moves as a result of fear and greed. Whenever there's fear in the markets, people usually sell indices and they buy the precious metal. But whenever there's greed in the markets, people usually buy the indices and then they hold onto the safe havens. Now, when the precious metal was consolidating, this is whereby we had the S&P 500 make one of its greatest move in the past 10 years, whereby in less than 130 days, prices did move more than 40% to the upper side from its lows. Now, looking at gold, once again, let me go back to gold. Looking at it at the moment, gold, remember, did enter into a period of consolidation for 85 days. But on the 22nd of September, another 1 hour, let's go to the daily. On this region here, I don't believe it was around this region here, yes, whereby Fed Chair Jerome Powell mentioned that we are going to see interest rate cuts. Now, remember, for the past 85 days up to this point, prices was essentially consolidating. But the moment Fed Chair Jerome Powell hinted that we are going to see interest rate cuts, the markets digested, especially gold, digested this data positively, and we did see gold make almost 20.3% gain in less than 33 trading days from the most recent speech that he had after the Jackson Hole Symposium. Now, if there was going to be a peace deal in gold currently at the moment, yes, it's going to affect oil prices, but could we see it affect gold? Very unlikely. Looking at the Middle East, they are heavily dependent on gold. There's a high likelihood it's going to affect oil prices. It's not going to affect the precious metal. But if there's going to be a peace deal in Russia, then that could really, really change the dynamics of what we are looking at. Hello, Wisdom. Let's team up, guys. Sure, we'd like to partner. Mr. Njokira, shout out to you, brother. Okay, if there are no more questions, that is going to be it for me. I shall see you. Okay, so GBP USD. Let's look at GU. Enoch wants us to look at GU. So the British pound against the United States dollar. Now, looking from a higher time frame to a lower time frame, once again, ever since January, when we did see the impacts of tariffs in the markets, the British pound was seen as a safe haven once again, and prices rallied to the upper side. But ever since, the same thing that we did see happen on gold, whereby it did enter into a period of consolidation for almost 100 days right now. The prices of GBP USD are neither clearly making higher highs, higher lows, and we will want to look at the most recent development that Bank of the MPC, that the 9-member MPC of Britain, whereby they did vote, most of them did vote to hold interest rates where they are currently at the moment. And as a result of this, the markets are waiting for the next piece of data that will be released. Price action, this high failed to break the most recent high that we did have back in June, July, whereby prices did make a high, retraced further to the downside. We had a change of character whereby prices did break the most recent low that was formed, and this high that did form later onwards failed to break the most recent high. Meaning, if institutions are looking at this price action, there is more likelihood that we might see selling opportunities if at all we do break this region of support that is currently at 1.3233277. If you do get a candlestick that closes well below, keyword here is if you get a candlestick that closes well below this region, I would want to look at more selling opportunities, potentially coming back down to this region of interest, whereby this is almost a 140 pip move to the downside, which is a good tradable range in the markets. Once again, this is going to be dependent on the data that is going to be released in the near future. Now, we haven't received NFP data this month as a result of the US government shutdown. Currently, at the moment, we don't know how the job market is in the United States of America, but looking at price action, we are seeing more buying opportunities on the dollar against the GBP. That's why we are seeing prices move further to the downside. Looking at these selling opportunities, the British pound is currently weakening against the United States dollar. That's going to be it for me. Tomorrow will be a holiday celebrating Utamaduni Day. The next session that we are going to have will be on Monday. I would like to conclude this morning market call by mentioning, have a blessed end to the week. I shall see you on Monday. Take care of yourself. Stay safe.